are just getting this breaking news. Digital real estate stocks plunging at this hour on a Housing Wire report, which says that a Kansas City, Missouri jury just found the National Association of Realtors, Home Services of America, and Keller Williams guilty of conspiring to maintain high brokerage commissions. The three defendants have been ordered to pay $1.78 billion in damages. This verdict comes actually after two antitrust lawsuits were filed seeking to drive down commissions and change how agents are compensated. I want to bring in Robert Reffkin, the founder and CEO of Compass, one of the largest residential real estate companies in the U.S. He is here in a Fox Business exclusive. What do you make of this news? Because there have been pushes to kind of break up that lock that so many of these real estate companies, maybe even including yours, have on commissions.
Yeah, so I just saw the headlines.
So did we. I get it.
The headline just came through. But agents, real estate agents, are the customers of Compass. We're the #1 brokerage firm in the country by sales volume, nearly 30,000 agents. And agents are the ones that set pricing, not the brokerage firm. So look forward to learning more.
Yeah, exactly. But clearly something needs to be done, especially at a time where the housing market is really in a strange state. Prices continue to rise. We've got Case-Shiller today up 6 months in a row. And yet mortgage rates, I mean, we can look at mortgage rates right now. 8% at the moment. That's 10 basis points higher than they were just last week, 8.08 if you want to be specific. And look where they were in 2021, 3.16%, which was, I mean, ridiculously low for those of us who are older than 19 years. You know, I mean, clearly we remember mortgage rates much higher. But why do you think that prices continue to rise? Is it just simply a skinny inventory?
Yeah, the problem we have in this country is there's just not enough inventory. And that's because 60% of homeowners are locked into mortgage rates of 4% or below, and they consider it a financial asset, and they don't want to lose it. And so they don't want to convert a 4% mortgage rate into an 8% mortgage rate. So if we want to see prices decline, then the Fed needs to bring down rates, and then that will increase the amount of inventory relative to buyers. Okay,
let me ask how low rates could go before we started to see sales really, or at least building homes start to pump up. Would it have to be around 6%, 5.5%?
My magic number is 6%. From everything that I see.
Okay.
One of the benefits of going up to 8 is when people get to, when it gets to 6, they'll be like, oh, 6 is great.
It's psychological.
It's all psychological.
Yeah, compared to 3, it ain't so great, but yeah, exactly.
And we also have a benefit that as time goes on, less people are locked into low mortgage rates. So it used to be this time last year, 70% of homeowners were at 4% or below. Now it's 60. So as naturally as time goes on, we'll see fewer and fewer people locked into a low mortgage rate.
Jim LeCamp says that the Fed funds futures, which bet on where Fed rates are going, will start to be cut in May. Personally, I think they're in no mood to cut rates. They're in no mood right now to hike them again, but no mood to cut rates. But that said, where do you see the most activity? Because in Case-Shiller, the prices really skyrocketed for the 3rd month in a row in Chicago, which surprised a lot of people. You know, Chicago, New York, Detroit. But Phoenix and Vegas, not so much.
I'd say the markets that are doing well are still the low-tax, warm weather states, the Carolinas, you have Florida, you have Texas, Chicago, cities, urban areas where they are bringing people back to the office to work in the office. A lot of people move to go to Zoom towns. They thought they can work away from their office forever. As that trend reverses, that brings activity back to the market.
Do you feel like we're seeing that reverse?
Yeah, absolutely. We're seeing it in parts of Seattle, parts of San Francisco, although slower. We've already seen New York come back, as we know, and that energy brings activity.
Let's dovetail to the rental market. The rental market is an interesting one right now, specifically because there is now a lot of inventory and not enough people who want to rent, at least according to Kiplinger's. Kiplinger letter said that the rental markets will continue to slow through the rest of this year due to this imbalance. Too many numbers of new units up for lease, but too few renters.
Yeah, we've seen rental prices, asking rental prices, come down consecutively for the last 5 months. And one of the reasons why is these people do have to move. You're in a must-move market. You have what we call the 5 Ds, diapers, diplomas, diamonds, divorce, and death. Those life events keep the market moving. But for that 60% that have a 4% mortgage rate or below, they consider it a financial asset. They don't want to lose it. So instead of selling that home, even when they have to move, they're renting it out. And so that's leading to an excess amount of inventory for rentals, which the opposite for sales. And that's why rental prices are coming down and sales prices are coming up.
Do you see in the short term that mortgage prices, a 30-year fix, for example, that they will move slightly higher before the end of the year? Wells Fargo put out an analysis, and they believe that the year will end at 6.94%. What do you think?
I would expect mortgage rates to be in or around this level, the 8% level, until the late spring, unfortunately, and maybe even through the summer. But at some point next year, we will get relief. And when you look at what everyone is saying, all the economists, they're expecting the Fed to start bringing down rates at some point towards the middle of next year. And then we should see mortgage rates come down accordingly.
Really quick, AI. You've implemented a lot of it on your website. How much have you spent to upgrade the technological aspects of Compass?
Yes, at Compass, we invested $1.5 billion in building the industry's first technology platform for real estate agents that lets them do everything from first contact to close in one place. We have a mobile app, Android and iOS on desktop. But the goal for Compass is to be best in the world at helping agents grow their business and have a better quality of life, more income to support their family, more time to be with their family, and technology is a core part of that.
But let's keep watching those commissions, because that is an interesting story, the breaking news that we had brought people. Thank you so much.
Thank you.